Sandeep, what's first stop for the Nifty after, or for the Sensex after this development, and what becomes the sustainable trading range in your eyes after this event, which many are calling it a game changer?
I think the elections have freed up a lot of political space for the government to do things which could not have been imagined even a week ago. The reality is that in the fiscally we are in a very bad situation. In fact, this is back to 1991 when the Congress got a similar kind of mandate and was able to drive through reform because India was on its knees. Right now, it's not exactly the same kind of situation, but the fiscal deficit is still very high. I think if in the next 6 months we see a desire, and we see a desire to do asset sales, the 3G auction proceeds. If we can see close to $5 billion coming through on the fiscal deficit by asset sales, if we would definitely see portfolio flows come through. Portfolio flows should be in the region of at least $10 billion this year. The BOP position will be much stronger. This year, the investor will make money not only in the equity market, but because the rupee will start appreciating. So a combination of that means that the market should trade between 11,000, 11,500 to at least 15,000 by March 2010. So a combination of action by the government on asset sales and strong inflows, which will definitely follow from portfolios, will give you a range which is very much from here to 15,000 by March.
Anand, morning. What's your range?
Mithali, somewhat similar, except that I think that 15,000 or 14,500, which is what we are really looking for, may very well happen in the course of this week.
Ramesh, just on that point you were making about domestic money as well, do you sense that in the short term at least there's going to be almost a desperation to deploy cash, or will people wait again for a buying opportunity?
The former, Mithali, there's desperation. I think there has been a lot of cash sitting on the sidelines, and there was a consensus. The market had could not possibly go up as the way it did prior to the election unless people were not committing to the market. But I think the situation will rapidly solve itself in the next week or 10 days, as money will pour into the markets, domestic money will pour in, FI money will pour in, get invested at any cost. So I think the next 10 days we'll see actually outstanding volumes on the stock exchange, barring the fact that it's already going to open up 1,000 points higher.
Could the bear market be turning, Ramesh, in your eyes? Is it too early, or would you say that the odds are higher over this weekend than ever in the last few months in your eyes?
I was hoping I could duck that question because it's actually the hardest question to answer. The odds that the bear market turn clearly have diminished, but I'm not ready to throw in the towel. I mean, I think this is, clearly at some point you start looking foolish if a market goes up 50%, 60% to still say it's a bear market rally. I don't know. It's one of those questions that I spend a lot of time thinking, but unfortunately haven't got an answer that I'm convinced about yet. Can the index go back to 21,000, in which case, of course, you would decisively say a new bull market has begun? I mean, what are the stocks that are going to propel the index to 21,000? Are you saying the property stocks go back to the 21,000 January 2008 valuation? I don't know, is Bharti going to triple from this level so it make up for the underperformance? I mean, if you do the mathematics, it's, say within the next year for the index to get back to 21,000, unfortunately, I'm not ready to do that yet.
Sandeep, what sectors would you watch in the immediate term by way of getting a big catalyst from this political outcome?
Well, in the immediate term, which I would define as between 1 month to 3 months, not the next trading session, I would think that the banking sector still has valuation support on its side. We will definitely see diminishing of the NPL problems as the economy picks up during the second half of this year. So one of the drivers to this sector is going to be the kind of interest rate declines that we are going to see, and the fact that the NPL problem will not be as bad as what people thought. So this is one sector which could definitely lead the rally. Other than that, it's back to 2006 in some ways. We will see in the next 3 months, all the infrastructure stocks start performing, all the construction stories come back. The underlying story of India, which is strong investment demand on top of strong consumption demand, does not go away. And what has gone away was investment demand and confidence about investing in capacities. It will still take some time, maybe 6 months to a year, for investments to come back. But the stock market will rally ahead of that. So the infrastructure and construction space, the real estate space, which has already seen a run-up, which has seen infusion of liquidity come through, combination of these sectors will lead the rally.
Ramesh, where does this leave the mid-caps and small caps? Because a lot of people who watch us are not terribly interested in what Bharti does or Reliance does or Infosys does. They're watching their own portfolios, which have moved, but they're still distantly away from where they were a year and a half back. Do you think this kind of a rally can pull that end of the market up?
It would have to. I think domestic desperation will pull it up. Clearly, it won't be foreign money doing that. But, for a local punter who can't buy, the large caps because they moved up or the sheer expense to buy them, he's happy to buy 500 of the 25 rupee stock. So, if you are talking of this kind of move, I think B Group will also participate. No question about it.
Anand, between banking, insurance, telecom, where do you think the government is going to move the first and the fastest? Because over the next 2 years at least, there's no state election either to keep its eye on. So which sector do you think comes up right on top of the list?
Mithali, first of all, before I get into the sector-wise, I'd like to just express a view on what the market expectation seems to be. And remember, if you were to look at what happened in 2004, we had a circuit down. This time we are expecting a circuit up. But after that circuit down, we had 4 years of unprecedented rally. I hope the reverse mirror effect doesn't come through, because when expectations get too far ahead of the curve, that more likely than not is the scenario. If you were to really look at where the government in the last term was not able to perform, except for disinvestment, I think pretty much there was nothing much that the market could put its finger on and say that here is where the fact that they did not have a clear majority made a difference. So though today it's not fashionable to be cautious, obviously, like I said, our view also is that you're looking at least 2,000, 2,500 points on the upside from here on the Sensex. The fact of the matter is that trying to put too much expectation on what the government will be able to deliver is not going to help the market, and which is why we are not expecting to see, when we reach that kind of number, 2,500 points up from here, we don't see the rally continuing on a sustained basis. Coming to now where the government action can be, theoretically it can be in all the above. You would expect to see action in infrastructure, you would expect to see disinvestment. The question to ask is, why is that going to help in any particular way? If we think that there are a whole lot of buyers for example, the PSUs, it clearly means that those are attractive. If they are attractive, what you are asking for is that the government should kind of sell their family silver so that they can bridge the immediate near-term shortage in revenues. So is that necessarily a great thing for the market or the economy? I'm not necessarily in the same camp as everybody else seems to be. Coming back to what you can do, for example, to bridge the fiscal deficit, you could raise taxes. Now that would be a horrible thing to do from the point of view of the market, but that's perfectly rational for the government to consider. You could look at cutting back some of the expenses that they are incurring. That would not be something that the government would be easily able to do, because that's the mandate on which they've got the votes. So actually speaking, they are in a pretty tight situation, and to expect that because of government action you will see a sustained growth, I think is actually asking for a bit too much. That said, if you remember, I've been one of those who've been saying that, look, the liquidity situation will improve dramatically because of the global factors, and I maintain that view that over a period of time, money supply in India will actually increase big time as the rest of the economies continue to pump up their own money supply, and that finds its way into other markets. So valuations therefore will be something which will come up with a lag. So rather than focusing on what the government would do, I think it's far easier to perhaps look at the companies themselves. And right now, for example, I would argue look for heavily leveraged companies, because they are the ones that will give you the highest beta on the upside.
Good to hear some skepticism or circumspect talk on a rara morning like this, Anand. Always good, a good dose of caution. But Ramesh, just a quick word from you on the flip side, because a lot of people were lucky enough to get in between the 8 and 10,000 Sensex mark. And many of their stocks would have doubled in value as well in the last 2 months. If they see the index at 14,000-ish in the next few days, do you think it's prudent to take profits once, or do you think you should just stay invested with such an important change which has happened politically?
I mean, it's generally not the way I play the game in terms of timing the market. I mean, I think we burned badly enough by not buying at the, say, 10,000 level on the index. I think you have to wait for events to dictate what to do. I don't think an absolute number is saying the Sensex is at 14,000, so you book profits. Makes a lot of sense to me. I think stocks can outperform from there dramatically, as say Bharti and Hero Honda performed during this run-up. So I don't think that's the correct way to approach the market. Instead of trying to pick the top, you need to find out which is the effective bottom of the market at this point.
Sandeep, where do you stand on that argument? I mean, there is difference of opinion on where this market can go on the upside, but would you say we've seen the worst of the price damage and we've put that behind us?
Well, I think the worst of the price damage is definitely behind us. I would definitely want to book profits if the market goes above 14,500. It would be a good time to book profits if for no other reason is that finally it's cash that matters, as we have always seen. So you can easily raise cash at those kind of indices. Again, as everyone has to highlight that the government has to deliver. The political space is now there. So if they fail to deliver, then these markets will not sustain. So I think we have a 6-month benefit of doubt given to this government. The flows will come through, money will start flowing in, and at 14,500 you can take some money off the table.
Sandeep, from your model portfolio, if you had to pick a couple of financials or a couple of infrastructure plays which are best suited to ride any positive development or action from the government, what would those be?
So if you look at our model portfolio, we like the banking sector. We like State Bank of India and Axis Bank, which are two large names in the banking sector that we like. On the construction side, we like Larsen & Toubro, so that's something which can really benefit. So these are some of the names which can definitely benefit from the kind of theme which will run in the market in the next 6 months.
Ramesh,